Hey guys, welcome back. Today we have another great Spac stock for you with a lot of upside potential that you may want to buy now. Of course, remember this is a Spac stock, so still consider a speculative investment. And lastly, full disclaimer, this is just my opinion and not financial advice, so please do your own further research. With that said, let's get into it. Today's Spac is Fusion Acquisition Corp, FUSE. This one's a bit different from our typical Spac strategies to make money. If you haven't watched it, please check out the video above on how to trade Spac stocks. As you recall, we usually don't buy Spac stocks after it has made a deal announcement. We usually sell because the price has gone up. But this one's a bit different, and let me explain why. Here, Bloomberg just published a report on Friday that Moneyline, a mobile banking platform, is in talks to go public via a merger with Fusion. Although they're just in discussion and nothing has been formally confirmed yet, it seems pretty serious. However, the stock barely moved. It actually went down and ended the day up just 10 cents. Thus, investors must not like this deal or they think that a deal will not go through. It could also be the hedge funds have cashed out, which is typically what they do, and the selling pressure pushed the price down. Or it could just be that everyone was focused on GameStop and other similar short names. Hence, we can't just assume it's a bad deal, and we must look deeper into Moneyline's business to determine if there's a buying opportunity here. So first, let's take a look at Fusion and see who they are. Fusion Acquisition Corp is a SPAC led by Jim Ross and John James. In June last year, they raised $305 million with the purpose of targeting a fintech company, particularly ones in wealth and asset management. Fusion is led by CEO John James and Chairman Jim Ross. John is the founder and CEO of fintech company Beta Smarts, while Ross is a former State Street Global Advisor executive. John brings his expertise in finance technology, and Jim has a lot of expertise in investment products, as State Street is very famous for their ETFs such as the SPDR SPY ETF. Thus, in looking at both of their experiences, Moneyline would be a perfect combination for the SPAC. Next, let's take a look at Moneyline. Since we don't have much information as there is no deal, we can't really look at the valuations or financials. At this point, we can only look at Moneyline's business offering and performance so far. Here, we see that they are an online mobile banking, lending, and investment platform. They seem very similar to SoFi, so maybe we can compare them a bit later. Here's a quick video promo of their products and services. In looking further, we see they have various products. One of their main products is mobile banking. Here, your money is being held by their partner MetaBank, which is a FDIC member, so your money is safe and protected. But what is very interesting and pretty cool is that there are a lot of additional banking features which you would not get with your typical bank. For example, there's an early paycheck option, which allows you to get your paycheck up to 2 days earlier, pretty much like in advance in case you need money. Then there's clear transparency and fees. I hate getting nickel and dime by my bank. Here, there are no hidden fees, no ATM fees in network, no minimum balance, no foreign transaction fee. I'm quite surprised actually, as some of my regular credit cards still charge foreign transaction fee, which sucks when I'm traveling abroad. Then there's even price protection on products, which is like a price match rebate up to $250. Again, my Citi card had this before and recently eliminated this benefit on my card. Thus, it's very cool that you get it here. Next, you even have cashback rewards by using your debit card. That's pretty cool too. They're even doing a gamification where the amount of cashback varies based on your luck when you shake your phone. They also have special partnerships with certain merchants for more cashback. Really, it seems like they're taking all the best features of credit cards and offering them to you for free. I'm not sure how profitable they are with these benefits, but this is definitely good for their members. Then they also have a cash advance. Here you get up to $250 with no interest or monthly fee. I definitely gotta look further to see how this works. Then we have Credit Builder, which is a loan to help you build your credit score as well as the usual credit monitoring, etc. There is a $19.99 monthly fee for the service, but it's definitely helpful for younger millennials to build their credit score. Next, they also have automated investing and management, which is smart because we know investing is the new trend right now. I think as more people shift from Robinhood because of the recent GameStop controversy, Moneyline could be a good alternative. I like that they have thematic investing options, which lets you invest in portfolios aligned with your personal interests. The rest are all kind of similar to other products, so I won't go through them. Lastly, let's look at their fee schedule. Here there's a monthly $1 admin fee, which is really nothing at all. And then there's just your typical ATM withdrawal if it's out of network. And again, I really like the 0 foreign transaction fee and no minimum balance. Next, in looking at their performance, they currently have 6 million members, which is pretty good, especially if we compare it with SoFi, which only has 1 million members. As for customer reviews, they seem to have pretty good reviews with over 78,000 5-star reviews. Thus, members seem to like their products and services. Moneyline also stated that their customers have saved over $250 million in bank fees and earned over $14 million in rewards and cashbacks. Additionally, Moneyline has also won many awards, including Best Digital Wealth Management in 2020, Forbes FinTech Top 50, Best Digital Bank in 2019, etc. Thus, they seem to be doing something right. In looking at their competition, in this case SoFi, they seem to be doing pretty good in the personal loan app category, ranking in number 1 as compared to SoFi and others. However, there's not much else we can compare as the deal isn't confirmed, and so we don't have any financials or business metrics to do a full comparative analysis. In looking at the technicals of Fusion, we see that it peaked at $12.80 with a lot of resistance. There is good support at $10.80. At the current price of $11.42, I think it's a good buy. For comparison, IPOE or SoFi is currently trading at $25. Of course, there are some differences in the two businesses and the size of their market share. But if we just compare members, Moneyline has 6 million members as compared to SoFi's 1 million. That's a huge difference. We know it's very hard and expensive to acquire customers. Thus, I think people are sleeping on the Spac. Now, maybe investors are thinking that this deal is just a rumor. But what is interesting is that their chairman, Jim Ross, in an interview with MFWire stated that they would not do another Spac until they have a deal on this one. Okay, so why is that important? Well, recently, on January 20th, Fusion announced they would be raising another Spac. Therefore, this sounds like that they're very confident on closing this deal and thus have began to work on their second Spac. For these reasons, I think that Fusion is a very good buy at these levels. I know I'm protected at 10 since that's the minimum net asset value of the Spac. So at 11, I have a $1 downside risk, but I have a $4 to $5 upside potential. By the way, full disclosure, I recently bought some of this stock on Friday. That's all for today. If you find this video helpful, please hit the like button. Also comment below and let me know what you think about this Spac and or Moneyline. And as always, this is just my opinion, so please do your own further research. Happy trading, and please don't forget to subscribe.